All right, if you want to scale your capital raising business, then this video is going to be for you, because I'm going to answer two key questions that you have to answer in order to be able to scale your business. Number one is you have to answer the question, what is the value of a single investor? If I know that information, I can then determine how much money can I spend to acquire a new investor. Well, how much money can I spend on marketing, for example? And that's what we're going to answer in this question, in this video. We're going to go through in detail how to set that up. There's going to be quite a lot of numbers. At the very end of it, I'm going to give you access to the spreadsheet I'm using to calculate this, and you can basically create your own business plan for yourself. But it's basically going to show you a 2-year life cycle, beginning with the creation of a core platform and a single investment that pays for itself multiple times over, and after year 2 has you raising $22 million, all because you invested in a core platform right now. So we're going to answer those two questions. What is the value of a single investor? And knowing that, how can I use that to determine how much I can spend on marketing to acquire a new investor? So on the platform, on outsourcing, digital content, all these things, we're going to answer that coming right up in this video. All right, for this scenario, here are 3 assumptions. We're going to assume that the average investor invests $70,000, and that is typical. If the minimum is $50,000, some are going to invest more than that, but typically the average is $70,000. Now, the general partner's gross acquisition fee for the entire deal is typically 3%. That's fairly typical. Now, your share, being the capital raiser, we're going to assume is 25% of the GP. So let's say you're raising all the money for that, and typically for that, capital raiser could be between 20 and 30% of the general partnership. We're going to assume it's right in the middle of 25%. All right, armed with that, let's get right into deal 2. So typically, let's say that your deal 1, you're going to raise $500,000, which means you probably are raised $100,000, $200,000, or $300,000 before, and that is going to be your next deal. You may have done a deal or 2, but this particular case, for our purposes, now you're building a platform. It's going to be deal 1. So your target is $500,000. And that means that based on the assumptions above, your share of the acquisition fees is $15,000, okay? Now, you decide that you're going to invest 50% of that in marketing. Now, this is an arbitrary number. It's just a suggested amount because you're still building a business. Now, over time, that percent's going to go down, as you will see in subsequent deals. So we're going to invest $7,500 in marketing. Okay. Great. And that allows you to keep $7,500 in profit. So that's really cool. Now, we're going to use that entirely the money to build our core platform. And what we want at the end of this is we want a lead magnet. We want to be able to lead capture, and we want to convert those leads into investors. And that's what I'm willing to invest $7,500 for in order to do that. So let's see how this plays out. Once you have the platform built, you're going to be a guest on 5 podcasts. Now, there's other ways you can generate leads. You can go and speak at a meetup, or you can do whatever you want. You're doing something that generates leads, but getting on other people's podcasts is such an efficient way. I suggest that. So you say you're getting on 5 people's podcasts. Now, in so doing, you're going to generate 320 leads that download your free ebook or your special report or whatever the case may be. Now, our experience and industry standard has shown that you have a 32-to-1 conversion ratio, meaning that for every 32 people that download your lead magnet, 1 of them will become an investor, which means that the 321 leads that you generate is going to create 10 new investors, which is not a lot. 10 investors. At an average investment of $70,000, that means you're going to have $700,000 in new capital. So that's pretty cool. Now you have your 10 new investors. Now you're going to do deal 2 with those 10 new investors. And again, you're going to be able to raise $700,000 from those new investors. And by the way, I'm not even counting repeat investment from previous investors, which is very likely. I'm just counting just new investors. So I'm going to raise $700,000. We're going to do the same math we did before. Your acquisition fees now obviously are higher because you're raising more. Instead of investing 50%, you're going to invest 25%. Okay, so your profit margin is already going up, though it's $5,250. If you remember earlier, we invested $7,500. We're starting to create a new baseline because we have our core platform built. So this allows us to keep $15,000, $18,000, $16,000 as profit. All right, now what are we going to do with this 5250 here? Let's check that out. The first thing we're going to do, which I would do, is I would outsource my digital marketing to a digital marketing company to handle all content production. That means video editing, creating blogs, creating the emails, putting it out on social media at a minimum. That's probably going to cost you about $3,000 a month to have a team do that for you, which is a fantastic investment for that. So I'm going to use $3,000 for that, and now I'm going to spend the rest, $2,250, on paid Facebook ads or some other lead generation mechanism. Now, $2,250. If it costs me $5 per lead on Facebook, and a lead is anyone who downloads my lead magnet, my free download. Okay, if it costs me $5, and this, by the way, is a fairly high number. It's costing us $1.60 for mine, and obviously a lot of that depends on how good your Facebook marketing guy is. But I'm just totally patting this at $5 a lead. Okay, totally saying this is terrible. Your Facebook guy stinks, and it's only $5 per lead. Let's say. So that $5 divided into $2,250 will result in 450 leads. Okay, at a 32 to 1 conversion ratio, that's going to give you 14 new investors. All right, 14 investors times 70,000 is nearly $1 million in capital. Okay, you see you see this engine starting to come alive. Let's do one more deal here before I kind of show you the bigger picture. We'll do one more time, deal 3. So we have our 40 new investors times $70,000 is $1 million. Acquisition fees goes up to 29. We're going to, again, ratchet our investment down to 20%. And that's going to be a little bit of our baseline. We like 20%. It's a great way to continue reinvesting in your business and generate more and more capital. And so we're going to stick at 20%. That's now $5,906. And our profit, of course, now goes up. So now we got $6,000 to spend. Let's see how we're going to do that. We're going to spend $3,000 per month on the digital marketing team. And now we have $2,906 to spend on Facebook ads. Same math now generates 581 leads, which is 18 new investors and $1.3 million in new capital. Okay, you guys get the picture? Now, here's the first year. Okay, here's the first year. The first 3 we just covered. We covered 1, 2, 3. The same way you use year 4. And there's our 18 that we generated from the previous deal. Our 18 here results in $1.3 million raised, so on and so forth. So by the time we're done, in year 4, we've done 4 deals. We have raised $3.4 million, 103,000 acquisition fees just for us. We have chosen to spend almost a little bit over a quarter of that for marketing. We use it to acquire 71 new investors, and we kept $77,000 in profits. It's not bad for year 1. What's really, really interesting is the leverage that we've built with all that. Yes, we've had some success. We have track record. And what's interesting is now, because of our track record, our profitability can go even higher. What I mean by that is typically as a sophisticated capital raiser, you're able to get better terms, right? Your Facebook advertising is going to get cheaper and so on and so forth. So then let me map out the next second year. The second year is the math is exactly the same here. We're reinvesting 20% of our gross acquisition fees back into our marketing. All right, and so you can see here that the number of investors we're creating keeps going up and up and up. So by the time we're done in year 4, we'll have raised $22 million. Gross acquisition fees to us of $670. We spent $134,000 on that, and by the way, in that number is an expanded marketing team because I want them to do more and more stuff because we know it's working. We're going to spend more money on that, so we're going to increase our monthly spend from $3,000 all the way up to $8,000 towards the end of year 2 to get to that. So now we're on average, we're spending a considerable amount of money on marketing, and then we're keeping $500,000 for ourselves. Isn't that exciting? It all started with a single decision to build your core platform, make a single investment, in this case $7,500, and then continue to invest a portion of your acquisition fee proceeds into more marketing. It is amazing to me the leverage that a platform has, guys. It is, and I hope I was able to articulate to you what a minimum amount of investment over time can do for you and your business. And we haven't even looked at year 3 and year 4, but if you look at established players in the space, they routinely raise $30 million, $40 million every single year. And man, that puts a lot of food on the table. It creates jobs. and you are also serving your passive investors as well. So it all starts with a core platform. But listen, we answered those two questions. What is the value of a single investor? Okay, we know that the acquisition fees coming in, we can calculate our portion of that, and then we can say, oh my gosh, that's the value of my investor, and I'm going to take a portion of that, 20 to 50% of that, and that answers the second question, how much can I spend on marketing? Now we know the answer to that in great detail. We'll invite you to download the spreadsheet and just follow the math along yourself if you'd like, and create a plan that's right for you. Again, it all starts with the creation of a platform, and I highly encourage you guys to consider that. Thanks so much for listening. Catch you guys next time.